Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, be it the FOMO, MOMO or even the TACO trade, global markets continue to run higher. Louise Bedford from Trading Game looks at the local market and says it's got some definite opportunities that traders and investors can take advantage of. Here's what she sees as hot and what's not.
Firstly, volatility is down. It is down to 1.87%. You can see that little trend in the lower panel of that chart, and it is a beautiful way for traders to get involved but not get whipsawed out of positions. So yes, we have the all odds above the moving average. Volatility is low, which means my macro is on. So I am actively looking for positions in the Australian market.
All right, well, let's break it down a little further then with a look at the ASX 20.
Sure. Well, the ASX 20, interestingly, is cold. You would have thought with CBA involved, driving everything up and up, that the ASX 20 would be hot. But actually, there isn't a lot of opportunity in this very top area. You need to come down into the ASX 100, and that should be in the very next chart. The ASX 100 is considered hot. We are above our moving average for the ASX 100, and we're maintaining from a relative strength comparison heat in comparison to the all odds. So we are trending up more effectively for 5 weeks or more to qualify according to my rule in comparison to the all odds.
Well, since the beginning of the new financial year, a rotation has been underway on the local market out of the big banks and into the miners. This as the iron ore prices strengthened recently. Thomas Atkinson from FX Evolution analyses what he's seeing on the Fortescue chart.
Fortescue has been terrible, as have a lot of the iron ore stocks, and they've been brought down to relatively significant lows. Now we can see here that we've got a really good technical setup. What we call an inverse head and shoulders, and viewers will be able to see there's 3 little yellow marks, and one is on the left, one is in the middle, and one is on the right. And what that does is that makes a left shoulder a head and a right shoulder, and effectively this is a consolidation or accumulation pattern. So generally speaking, you see these around more major bases. You generally want volume to be higher, which it's okay, and we've just about seen a bullish breakout. So if we keep seeing a little bit of strength here in Fortescue, let's say it breaks 17.10, 17.15 and actually gets a weekly close in particular, that could take us back up to those 20 levels from a technical base. And I don't mind what I'm seeing here. I mean, I think everyone's sick of iron ore in terms of a lot of traders and investors. And that's the type of time that I usually like to look at it because, when everyone's sick of it, it often gets rotated into. And there's been a lot of excitement, I would say, just in the last week from early traders.
Well, another stock that has attracted attention for Thomas has been Cochlear. He says the best trade was about 3 or 4 weeks ago when it had an exceptionally strong rejection.
I've included this for the audience just so they can kind of, imprint this type of setup in their mind and start to look at markets a little differently. So I've got a red arrow pointed towards this massive rejection candle, and that also comes off huge volume down the bottom. And this is one of those classic, everything looks terrible, and then all of a sudden it completely rejects that, and was probably, it's probably some news event. But realistically, this is the type of thing that you often do look for in basing patterns or consolidation patterns. That was a nice move. Now we reached the trend line. So similar to the S&P, we've got a kind of resistance happening here. If we break through, that could be, maybe we're going towards 340. So very important level here for Cochlear. I'm certainly watching it. And I'm more importantly watching the S&P, but if the S&P keeps plowing higher, I don't see why other stocks won't potentially want to come along, and Cochlear may be a good breakup.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.